We are trying to create passive income. Yani pesa inatutengenezea pesa kama tumelala. Central Bank of Kenya, it's borrowing on behalf of government. Ndio inafanya hiyo kazi kama kada ya moko. Every time they issue a new bond, they give it a name. Si hata wewe venye ulizaliwa ulipewa jina. This is Angie on bonds with Money Mind. Let's not confuse trading of bonds and passive investment of bonds. You see shares, the way we buy and sell, that is trading in shares. Unanunua 10 bob, unangoja ifike 12 bob, unauza. There's also that in bonds, but that is done by designated people we call the treasury bonds brokers or traders. And there's a secondary market. But I want to address the investors because we are trying to create passive income. Yani pesa inatutengenezea pesa kama tumelala. But even in shares, you can buy shares and wait for dividends. In bonds, there's the same thing. There are people who buy and sell, and that's mostly for institutions. For retailers, we buy to keep, wait for the coupon to be paid every 6 months. Then after the maturity of the bond, we get back our money. Usianze kusema rate imepanda, rate imeshuka. You'll probably get it wrong. These instruments I'm calling bonds, they have names. We have the two main types: infrastructure bonds or IFB bonds, which are tax-free. What is being taxed? It's the interest that you're getting, what we're calling the coupon. So why is it tax-free? We are a developing country, so it's like an incentive to encourage us to invest in an infrastructure bond to support our infrastructural development. The other main type, we call it the FXD bond. Those are taxable. They're just fixed interest kind of bonds. Even the IFBs are fixed interest kind of bonds, but FXDs are taxable. IFBs are tax-free. The other one we call it the SDB bond, which is just like an FXD bond. So just jua kuna IFB, kuna FXD. The second thing that comes in the naming, because tunasikianga IFB For example, there's IFB 1 2024 8.5. So IFB 1 equal tax-free. 2024, the year when it was issued. 8.5, the duration of the bond. So when you talk of FXD 1 2018-25, FXD, it's taxable. 2018, the year when it was issued, stroke 25, the duration of that bond. They keep issuing new bonds or sometimes reopening the same old bonds. Every time they issue a new bond, they give it a name. Si hata wewe venye ulizaliwa ulipewa jina. All these bonds are earning different interest rates, what we call coupon. If it's a new bond, the market determines coupon itakuja wapi. Hii interest yenye inalipwa from that bond, it is fixed. In simple terms, ukinunua bond ya 50k na umeambiliwa 12% coupon na hiyo bond ni 5 years long, calculate 12% times the 50,000, so you'll have 12% of 50,000 for the next 5 years until maturity. Then after 5 years, you get back your 50,000. When do you get to buy these bonds? So government, through Central Bank of Kenya, issues a bond through a market we call the primary market. Why primary? Because it's directly from Central Bank of Kenya. It's borrowing on behalf of government. Ndio inafanya hiyo kazi kama kada ya moko. You can buy a bond every month. So you don't buy a bond anytime ukifikiria. You wait for them to open. Unanunua, wanafunga, hiyo story inaisha. Tunangoja bond ya the next month. However, the other way is through another market we call secondary market. Tuangalia mkulima, you can go to a farm. That is a primary market where you go and buy directly from the farmer. Kuna watu wanaitwa brokers, wananunua from the farmer. From there now they can sell to other people. So there's a vibrant bonds market where people buy and sell, buy and sell. If you're new, please stick to the primary market until you create a portfolio of several bonds before you start looking for bonds in the secondary market, because there's a new pricing for the secondary market. So you have to learn about the pricing and how it's done. Can you sell your bond before maturity? Ama lazima ungoje kama ni bond ya 25 years mpaka 25 years ishe? For retailers, sisi, mimi na wewe, if you're investing for passive income, to get the coupon every single 6 months, try to hold your bond to maturity. You can sell a bond before maturity. Yes, you can. How? 2 ways. Through the secondary market, you can sell back your bond. You approach a broker and you tell them, I have this bond, I want to sell. Nitafutie mununuzi, mtu atanunua bond yangu. And they have to trade your bonds on the NSE platform, just like kuuza shares. Kuna platform ya bonds as well. They give you a price which will be determined by the market. The other way is you can give it back to the Central Bank of Kenya and they can give you back your money. We call that process rediscounting of bonds. It's not the easiest of things to do. Of course, there'll be a charge on it, but yes, as a last resort, you can take back your bond to CBK and they can give you back your money.